Time is the most valuable asset, and I save it for you. Welcome to the Week in YouTube Finance.
Have you ever tried to hold a beach ball underwater? This is not a beach ball. It's my daughter's little kickball, but you get the idea. You can push it down, you can suppress it, maybe even sit on it, but the second you let go, boom, it rockets back up. So that's exactly what's happening right now. Stocks are soaring since Trump tweeted it's a great time to buy. They're actually up 14%. And after one of the ugliest drops of the year, we've seen a massive rally, and it might just be signaling that lows for 2025 are in. Let's break it all down. Oh, you like that? Channel my inner Andre Miller. Bonus points if you remember Andre Miller. Oh, so back on April 2nd, the day after Liberation Day, markets tanked hard. And I'm talking more than a 10% drop in just 2 days. So fear and panic was everywhere. And you can see that by all the old videos that I was making from about a month ago. But just like that, with the beach ball underwater, when it finally shot back up, it ripped, okay? On April 8th, the S&P 500 was down over 12%, one of the worst one-month drops ever. And if you fast forward just 30 days, stocks surged over 13.5%. So that's the best one-month gain since the COVID lows in 2020. So if you go down here, you can see the S&P 500 index on a 21-day rolling return. You can see all these COVID dates, 2020, 2020, 2020. The next best, 5/8/2025, buddy. 13.7%. That's why during all those videos in April, I was telling you to buy the dip. I deployed over $50,000 buying the dip over the past month and a half, and now my portfolio is doing incredibly well, and this is what I feel like.
I'm gonna come.
So the best and worst market days are always clustered together. That's why I'm sharing this chart with you. So if you miss the bad, you're probably gonna miss the good too. We have 0 to 80% gains. We have 0 to negative 50% gains, and you can see the massive swings, okay? These are based on a 1-month rolling return for the S&P 500 from 1928 to basically current time at the time of this recording. So if you want to take a look at this a little bit more in depth, pause the video and take a look at this chart. And just to prove my point with the buy the dip strategy that I've been telling you for the past month and a half, let's take a look at total returns since Liberation Day, okay? This was April 2nd. So we all hold Fartcoin, right? It's a big holding of mine. Really? Who's buying Fartcoin? Really, guys? This is a mature investing channel, okay? But for those of you that have held Fartcoin, good for you. Bitcoin, 18%, NASDAQ, 6%, international developed stocks, 5%, emerging markets, 4%. Gold, 3%, even though it is hitting multiple all-time highs. It's hit about 55 all-time highs the past year. S&P 500, 3%. Bonds, still, a nothing burger. US dollar, minus 1%. And then crude oil, which I've been talking about in all my last videos, down 13%. So let's talk about Monday in the market. This was a massive day. Stocks soared after news broke that the US and China were cutting tariffs big time. President Trump hinted that tariffs could fall to 80%, and what we actually got was down to just 10%. That's a shock to the upside, and investors in the market loved it. The Dow jumped more than 1,000 points. That's only happened 3 times in history. So what's even more impressive is that the market closed near its highs, despite being short-term overbought heading into Monday. So that, to me, is showing real strength. Take a look at this chart right here. So stocks are less than 5% from all-time highs. So this chart goes back to 2020. 0% is basically your all-time high. And then if you look here, we were basically at 4.88% away from reaching those all-time highs again. So to me, this is showing real strength, and the buy the dip strategy, I don't want to say always works because the dip can keep dipping. And a lot of people are saying, oh, this wasn't the dip, blah, 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 blah. But as you can see here, we're only 5% away from all-time highs. Okay, so let's put this 13% rally into perspective. I'm taking a look at every time the market gained 13% or more in a single month, and it's only happened 13 times before. And in 11 of those cases, stocks were higher a year later. The only 2 losers were basically the early 2000s dot-com bubble, and then the last 4 times were double-digit gains across the board. So if history is any guide, let's take a look at this chart right here, and this rally could just be the beginning. So I'm going to zoom in a little bit, and then I'll show you the bottom of the chart. So again, S&P 500 performance after 13% in 1 month. So you can see here, this is basically returns over the previous month, 1 month, 3 months, 6 months, 12 months. And again, the two outliers were the dot-com bubble. We have 1999, and then we also have early May of 2001, excuse me. So after that, you can see all these other years were basically massive gains, except for like 2002 and 1988, which is just at about 6.5 and 6.7% respectively. But you can see the average is 17.6% where my cursor is, and the median, which is the most important in my opinion, is 15.5%. So again, did you buy the dip like I told you? Did you buy the dip like the president told you? Okay. He's literally tweeting, buy stocks. Now is a good time to buy stocks. And a lot of people were just so pessimistic or shook that they didn't. And now if we look at all the years since 1950, average 9.2%, median is 10.4%. Okay, so now let me hit you with something a little bit even more rare. So there's a technical indicator called the de Graaf thrust, okay? Oh, yeah. I told myself I wasn't going to do that. Basically, the de Graaf thrust, wow, it measures how many stocks are hitting new 20-day highs at once. So, and when more than 55% of the S&P 500 stocks hit that level, like they did yesterday, it's considered a major bullish signal. So over the last 30 times this indicator flashed, the market was higher a year later, 29 out of 30 times. That's a 97% hit rate. So I can go all the way down here. I'm just trying to keep the font as big as possible. So if we look at it chronologically, you can see it happening from 1976 all the way to May 12th, 2025. And then if you look at the average return, 16.3, median 15.9, and then all years since 1950, again, 9.2, 10.4. So very encouraging in my humble opinion. This is very encouraging. And again, did you listen to your boy when he told you to buy the dip? Okay, a couple more slides, and then I want to get to the my thoughts portion of the video and the outro. And I do have just a quick little life update. Basically, I wanted to share this chart with you. So this is from Charlie Bolello. He shares a lot of good stuff. This was from this morning at 10:37 a.m., May 13th. Basically, he shared this chart showing that we've been up 22% since April 7th, for April 7th's low to where the stock market is right now. So again, you guys, I know dips like this look scary, but again, all it takes, I've been telling you this in my last videos, all it takes is one tweet. It's unbelievable how volatile these markets are, you guys. So is that something that I want to be invested in? Obviously, I understand the game and I play it too. Okay, that's why I buy Bitcoin and gold. But you know, the chart is going to keep going up and to the right. This is what I've been telling you on my channel for the past 7.5 years. Okay, nothing stops this train. Now, if we go into this chart right here, I do want to talk about just asset classes, total return since 2011. And basically, this was updated May 9th. So again, it's not going to reflect what's been happening over the past 2 days, but it is still pretty accurate. So I know the font is really, really small. And if I zoom out more to get that last chart with the cumulative and the annualized numbers, I'm just going to have to cut off some of the charts so you can see this. Basically, you can see here that for 2025, the highest returns have been gold. I've been telling you this in my videos for a couple months now. So gold is at 26.7%. These EAFE stocks, 13.7%, Bitcoin 10.3%. And then everything else is pretty much single-digit returns. And then this still has the SPY at negative 3.4%. So that's no longer true. SPYs actually break even year to date, or just down maybe like 20 basis points at the time of this recording. But if you look at the cumulative return, SPY is at about, let's see here. Sorry, there's so many lines. It's hard to read this on my monitor. It's almost at about 500% with an annualized of 13.1%. Then if you look at, shoot, am I reading this wrong? Dude, am I going crazy? Am I getting old? Is this what getting old is like? I have to literally drag the cursor across the screen to keep it in the right row. Yes, I'm right. 482% cumulative since basically 2011, 13.1% annualized since 2011. And then underneath that, we actually have QQQ, which is the NASDAQ 100, which is almost at 1,000%. It's at 919%. And 17.6 annualized. And then if you look at Bitcoin, we're at 3,432,000, actually 34 million, sorry, 34,327,467%, with a 143.3% annualized return. And there's still people that literally unsubscribe from this channel since I've been telling you to buy Bitcoin since 2017. But that's okay. It's okay. You're going to be working till you're 85, and that's okay. I'm okay with that. Not laughing at you. I'm laughing with you. It's like Rodney Dangerfield in Caddyshack when he goes, "Oh, this hat, that's a terrible hat. Oh, it looks good on you, though," when the judge is wearing it. I don't know if I can put it in the video due to copyright stuff. But anyway, real quick, do want to get into the sponsor of this video, you guys. At the time of this recording, gold has outperformed you. Happy stacking. Thanks for sitting through that, you guys. So what is the point of this video? What is the bottom line? So obviously my beach ball analogy, even though it's more like a dodgeball or a kickball. That's what I meant to say, not dodgeball. It's a kickball. Dude, I used to destroy kickball. I played soccer since I was literally 5 years old. I'd be the best player, just blasting these balls out the park, at recess, at gym, whatever. I don't even know why I'm talking about this. So the bottom line of this is don't let short-term fear shake you out of long-term opportunity. I've been telling you that on this channel for 7.5 years. Markets are resilient and they often bounce back stronger than people expect. Again, the reasons for that: U.S. dollar dominance. We're the world reserve currency. We have the deepest capital markets in the world, military, petrodollar, all that stuff. Until that starts to deteriorate, I'm buying VTI hand over fist, okay? So if you're investing for the long haul, this might be the time to actually tune out the noise and stay the course. Again, if you got value from this video, make sure to just gently click the like button, gently click the subscribe button, turn on the bell for notifications, okay? And then also in your app, make sure you have notifications. That way you can actually see them when I post the video. And share the video with 13,000 friends. Thank you so much for watching. And as always, have a prosperous day. Okay, so the reason I didn't post for a few days was because I was actually in California. So listen to this. Usually I end these videos on a funny note, but I got to share this with you guys. So my dad and I, we've been buying and selling cars for a long time. We usually buy desirable / rare / stuff that's on like Bring a Trailer. Okay, that's the kind of stuff that we buy. We drive the car for a few years, buy it right, and then either sell it, make money, or close to break even. So anyway, dude, I've been looking at cars my whole life. I know what to look for. This guy, 87-year-old seller, I actually tweeted about this, maybe late April, early May. 87-year-old original owner. It was a 2013 M3, last year of the V8, okay? And probably the only V8s they're ever going to make before everything becomes hybrid and completely regulated and turbo 2-cylinder, turbo 4-cylinder. Everything sucks now, okay? And everything's going electric, which just sucks. No soul, no nothing. Anyway, I digress. Perfect maintenance history. I checked the Carfax, did everything. I had a Google meeting with the guy. He was so old, he didn't know how to flip the camera around on his phone. He literally turned the camera around to show me the car. Everything looked great. Everything checked out. Maintenance history, 5,000 miles. I called the dealer, talked to, everybody there. Great car, right? I get there. I fly across the country to San Francisco, certified check in hand, ready to buy this car and get it shipped closed container across country back to where I live. Dude, I get there, drive 2 hours down to Monterey from San Francisco, take Pacific Coast Highway 1, great drive. And shout out to Ask Sebi, shout out to Humphrey Yang, met up with them, had dinner with both of them. It was a great time. And then I go to see the car, dude. Ratty. I start asking more questions after I notice some stuff. And he's like, oh, yeah, this woman backed up into me in the parking lot and blah, 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 blah. I couldn't believe it. Because usually when you see original owner, 87-year-old guy, doesn't know how to use technology. It's like buying real estate from a guy with a AOL.com domain, okay? That's when you're just like licking your lips like, yes, I'm buying this multifamily property from a guy with a @AOL.com email address or at Yahoo, So same situation when I got there. Ratty, dude. Not like ratty, but to my standards, it was ratty. Usually we buy stuff that's, somewhat clean for a good discount, and then we just, own it, clean it up, and then make money on it. And then I couldn't believe it. Complete waste of a trip. It's not like I drove 10 minutes down the road. Dude, I flew across the country, right? I have a wife and 2 kids. I spent, 3 nights out there. But anyway, it wasn't a waste of a trip. Met up with some other YouTubers. It was fun. But the moral of the story is that you can invest in other asset classes outside of just, stocks, bonds, real estate. My dad has actually done very well for himself flipping cars. And he's just a hobbyist. He's just a mechanical engineer, just the guy that likes to have cool cars, and he usually breaks even or makes money. So I don't know why I told you this story, but there will be more videos coming. I was just traveling and very busy, and there's other like health related stuff as well. But your boy's here to stay. Thank you for watching. Peace. Bye.
Well, thank you for that, Marco. Love the sound effects.
For the past month, everyone has been bearish on Bitcoin. When it hit $75,000 a month ago, people were calling for even lower prices. Well, guess what, bears? We just went back over $100,000. How do you like them apples? Now, we might correct from here, but I think the outlook is very bullish for Bitcoin. In fact, I think $150,000 Bitcoin or even higher is still in play. So, let's talk about why. Well, maybe you noticed that the US has gone tariff crazy and basically started trade wars. This had led to uncertainty and big stock and crypto market drops. However, things have now stabilized, and with each piece of good news, price goes up. For example, Trump announced a full and comprehensive trade deal with the United Kingdom. This announcement comes after weeks of negotiations during a global trade uncertainty, which was influenced by tariffs on imports, including a 10% baseline tariff on UK goods and 25% on steel, aluminum, and vehicles. Or as they say, aluminium. The deal that was just finalized signals a de-escalation of tariff pressures for the UK, a major US trading partner. As a result, Bitcoin is up over $101,000 as I record this video. When again, as I already mentioned, just a month ago, it was at 75K. Positive trade developments can trigger big risk-on behavior, and the world of crypto, in case you hadn't noticed, is incredibly risk-on. This means stocks, and Bitcoin will typically go up in price. A successful US-UK deal could set a precedent for agreements with other countries. A deal with China, for example, would be massive for the markets. Also big in the news as I record this video, New Hampshire has made history by becoming the first US state to pass a law creating a Bitcoin reserve. And not just a reserve like other states have established where they can collect fees and taxes in Bitcoin and hold it, but a reserve where they will actively purchase Bitcoin. A very, very important first. This bill lets the state invest up to 5% of its $3.6 billion treasury, about $181 million, into Bitcoin and precious metals like gold and silver. And this move sets a bold precedent.
Let's see if it pays off for them.
While other states like Texas and Arizona are considering similar steps, and Texas, my home state, you better go with the program, New Hampshire is officially the first to take action. But the overall idea is to hedge against inflation, diversify reserves, and then bet on Bitcoin's long-term value, which to date has been a great bet. One state doing this will not move the price, just move sentiment, but 10 states, 20, 30 plus, and if the US government itself starts buying, well, that will definitely move the price. Like I just covered in this video right here, the global M2 money supply is at all-time highs right now. The M2 money supply, which includes cash, checking deposits, and easily convertible near money, reaching all-time highs, signals significant monetary expansion. With more fiat liquidity, purchasing power can be eroded through inflation. That's why your groceries are so expensive now. So this can cause people to seek non-inflatable assets like Bitcoin. Lots of money in accounts can also cause people to speculate, not just on Bitcoin, but across all of crypto. People want their money to make more money. The M2 money supply is a massive tailwind for Bitcoin and has historically been a great indicator that prices will go higher when the M2 number does as well. Now, as you probably know, MicroStrategy has pursued an aggressive, to put it mildly, Bitcoin acquisition strategy since 2020. Using debt and equity offerings to amass over 550,000 Bitcoin so far, which is really, really wild if you think about it for too long. They've now positioned themselves as the largest corporate holder out there. The company's 2121 plan aims to raise $42 billion by 2027 to buy more Bitcoin, leveraging convertible bonds and stock sales to maintain a BTC yield of 6 to 10% annually. And recently, MicroStrategy, which is now rebranded as Strategy, purchased 15,355 Bitcoin for $1.42 billion. And this happened just back in April, and then they sold 123,000 preferred shares in March to fund 130 Bitcoin. And now their success has been seen by others, including our old meme stock friend, GameStop.
Now that's a name I've not heard in a long time.
In late March, they announced a board-approved update to their investment policy designating Bitcoin as a treasury reserve asset, following the playbook of MicroStrategy's Bitcoin acquisition strategy. MicroStrategy, now Strategies strategy. The company raised $1.5 billion through a convertible note offering, finalized on April 1st, 2025, which was not an April Fool's. The proceeds were primarily intended to purchase Bitcoin alongside general corporate purposes. CEO Ryan Cohen also bought $10.7 million in GME stock shortly after the announcement. There are debates about the extent of Bitcoin investment, but it is a clear signal that the MicroStrategy strategy is not a one-off occurrence, and I'm very confident that we will see more adoption of Bitcoin in this way in the near future. Bitcoin ETFs have been booming lately. Since January 2025, BlackRock's IBIT has pulled in over $37 billion and now manages more than $52 billion in total, actually beating its own gold ETF that's been around for 20 plus years. On April 22nd alone, ETFs saw a wild 912 million inflow in a single day, way above the daily average. And that week, they grabbed 25,000 Bitcoin in just 3 days, while only 2,250 Bitcoin were mined that entire week. And stuff like that just has supply squeeze written all over it. Even with a few pullbacks, like a $2.4 billion outflow in February, total net inflows since January 2024 have hit nearly $19 billion. The last week of April alone saw 5 straight days of inflows totaling almost $1 billion. So why does this matter? Well, simple. More demand, limited supply. If these ETF inflows keep heating up, Bitcoin could easily rocket towards $150,000 or more. And some estimates say that every $3 billion in ETF inflows could push Bitcoin up another $9,000 in price. With institutional interest growing and ETFs buying 10 to 12x the daily mined Bitcoin, the pressure is on, and the price could explode. And that pressure might only increase from here. Now, speaking of supply shock, the Bitcoin halving in April 2024 cut the block reward in half, from 6.25 Bitcoin to 3.125 Bitcoin, which basically means there are now only 450 new Bitcoins created each day instead of 900. And that's a big deal when there's a hard cap of 21 million Bitcoin, and nearly 19.7 million of those Bitcoins are already out there in circulation. And historically, every halving, 2012, 2016, 2020, has kicked off a major bull run within 12 to 18 months. And it seems to look like we are seeing that play out again. But this time, the supply crunch is even more intense because ETFs are buying up Bitcoin like crazy. Hello, $912 million of inflow in a single day. And MicroStrategy just scooped up all their 15,000 Bitcoin. And of course, now states like New Hampshire will be stacking sats as well. And then just add in inflation fears from the massive tariffs and a record high money supply flooding the system. And you've got the perfect storm. Less Bitcoin available, more people and institutions wanting to buy it. And that's why $150,000 isn't just a moon boy dream. It's actually on the table. And even higher prices are on the table. Just keep in mind, as always, it's crypto, so things can get bumpy along the way. Volatility and the roller coaster of price is part of the ride. More and more people are looking at Bitcoin as a way to protect themselves from inflation, and it makes sense. Unlike fiat currencies that keep getting printed, I'm looking at you, record high M2 money supply. Bitcoin has a hard cap of 21 million coins. That's it. No printing more when times get tough. And with the US hitting China with crazy tariffs, 145% on some imports, prices on everyday goods are going up. Big companies like Ford and Mattel are already passing on those costs to consumers. In case you're not getting it, you pay the tariffs. Well, that kind of inflation eats away at your dollars, but Bitcoin, well, it doesn't get diluted. This is one of the big reasons why I love Bitcoin so much. And with the 2024 halving, cutting new Bitcoin creation to just 450 per day, it's even scarcer now. That digital gold narrative is getting stronger and stronger, especially as institutions jump in. Like I said, MicroStrategy is loading up, GameStop's in, and now even states are jumping into the stacking Bitcoin game, which of course is a sentence I was not expecting to say. In just the past month, Bitcoin's price is up 37% with ETF inflows and tight supply pushing it higher. But of course, it is not that easy. Bitcoin still swings hard, especially with recession fears and market corrections, but as a hedge against inflation, well, I think it's looking stronger than ever, and it seems like the markets are agreeing. It's also worth noting that regulation around crypto, especially Bitcoin, keeps getting clearer and clearer, which is a pretty massive deal. This month, the OCC, that's the Office of the Comptroller of the Currency, gave the green light for banks to actually handle crypto. That's custody, payments, stablecoins, the whole package. And that's a big step toward bringing Bitcoin into the traditional finance world. And on top of that, Trump's been making noise about being pro-Bitcoin, even floating the idea of a national Bitcoin reserve and hosting meetings with crypto leaders at his resorts. So love him or hate him, that kind of support does get attention. And speaking of Bitcoin being digital gold, well, gold itself, the actual precious metal, just hit an all-time high this month of over $3,300 an ounce. And I think that's actually super bullish for Bitcoin because of more and more people seeing Bitcoin as digital gold.
Bitcoin is here to stay and probably here to stay as a kind of digital gold.
It's scarce, it's inflation resistant, and way easier to move around than the heavy, shiny stuff. And it seems like gold has been pumping due to inflation fears, like all the wild tariffs, plus the record high money supply and all the geopolitical chaos. And now investors are starting to treat Bitcoin like a digital version of gold, who previously might have not paid it that much attention. And if this trend keeps up and more capital flows into Bitcoin, like it is into gold, well, $150,000 isn't that far off. And just to give you a little more of an idea of how far this could go, if Bitcoin eventually hits the same market cap as gold, which is around $22 trillion today, then the price of one Bitcoin would be over $1 million USD. Now, will that happen this cycle? I highly doubt it, but I am pretty confident in that outcome over the next 5 to 10 years. But now we come to the biggest factor of them all, I think. FOMO. Not only is FOMO real, fear of missing out, but it's been one of the most powerful driving forces behind Bitcoin and crypto's prices in the past. When Bitcoin starts pumping, everyone takes notice. There's renewed enthusiasm, and people that previously ignored it start to pay attention. This, of course, hits institutional investors, but it also hits with retail investors, which is you and me, especially hard. Buy Bitcoin at $75,000? No way. Buy it at $120,000? You bet. We've seen this before in 2017 and again in 2021, and I think it's
happening again.
Especially with hype all over social media and YouTube. Good news after good news fuels the fire. People buy in, the price goes up, and then that cycle repeats. And then once Bitcoin heats up, the altcoins usually follow. That's when alt season kicks off. People will eventually think that they missed it with Bitcoin. They didn't, and look for what's next. Well, what's next are the altcoins. If Bitcoin keeps running and the hype keeps building, then the whole market could go parabolic. In my mind, and based on what we're seeing out there in the world right now, $150,000 Bitcoin and beyond is inevitable. But again, it might not happen right away. I think all that I've been talking about here is a strong list of indicators and events that need to transpire before we see those prices. The big question though with all of this is, how do you make more money? Well, watch this video right here where I dissect what I think is the biggest indicator of where Bitcoin's price will go and how to watch for the signs so you don't miss out, and what steps you can take to make a ton of money in the process. Goodbye.
Well, very cool. Thank you for that, Andy. Very entertaining video. Are we going over 150 with Bitcoin? What do you think? How soon is that going to be? Let me know.
Something just happened that could completely reshape how the world works. On May 13th, President Donald Trump stood in Riyadh, Saudi Arabia, and announced a $600 billion investment deal between Saudi Arabia and the United States. Now, this wasn't just about oil or weapons or technology, but it could be the beginning of a new era for the petrodollar. A $1.8 trillion shift from the Middle East straight into the US economy. It's something we haven't seen on this scale in decades. And at the same time, the president helped broker a ceasefire between India and Pakistan, pulling two nuclear countries back from the brink of war. And that alone would be historic. But at the same time, the US and China agreed to pause their tariffs, cutting the rates from 145% down to 30%. And the market exploded. The S&P 500 went way up, the Dow Jones went up, and even Bitcoin is now trading above $100,000 a coin. And then, to cap it all off, Coinbase did something that no crypto company has ever done before. It was just added to the S&P 500 index, making crypto and Bitcoin officially part of the American financial mainstream. And this is huge. So if you felt like something big just happened, you're not wrong. This is not just a feeling. The entire economic order is shifting in real time. And this might be the moment that defines the next decade for a lot of investors. So in today's video, I want to break it all down and explain what it means, why it matters, and how I'm personally investing. So let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the petrodollar 2.0. Now on May 13th, President Donald Trump landed in Riyadh, Saudi Arabia, and walked away with a $600 billion investment commitment. And he gave what might be one of the most respectful and strategic speeches that we've heard from a US president to the Middle East in a long, long time.
The transformations have been unbelievably remarkable. Before our eyes, a new generation of leaders is transcending the ancient conflicts of tired divisions of the past and forging a future where the Middle East is defined by commerce, not chaos, where it exports technology, not terrorism, and where people of different nations, religions, and creeds are building cities together, not bombing each other out of existence. We don't want that.
Now, this might be the beginning of a huge realignment, a petrodollar 2.0, so to speak. And here's how. As part of this deal, Saudi Arabia is going to put hundreds of billions of dollars into the US economy. And the breakdown goes something like this. A $142 billion arms agreement, which is the biggest defense cooperation in US history, covering everything from missile defense systems to military communications. Another $20 billion is going to go into US-based AI infrastructure by a Saudi company called DataVault, including building the kind of data centers that power things like ChatGPT. There's also autonomous vehicle investments and every major investment over the next decade. Now, another $80 billion is going to go into partnerships with Google, Oracle, Salesforce, AMD, and Uber to develop what they're calling transformative technologies. And it's not just tech or defense, it touches almost every single sector. Infrastructure deals with Hill International and AECOM, $14 billion in energy exports via GE, $5.8 billion into healthcare and manufacturing in Michigan, $4.8 billion to aerospace for Boeing aircraft. I mean, we're talking on and on and on. And this deal with Saudi Arabia was just the beginning. Because days later, President Trump got a $1.2 trillion commitment from Qatar. That includes a $96 billion deal with Qatar Airways for up to 210 Boeing aircraft, along with a $38 billion expansion. But then the president flew to Abu Dhabi in the United Arab Emirates, where he was able to get another $1.4 trillion commitment over the next 10 years. And most of that money will be for the energy and defense sectors as well. All in, the total investment commitments from the Middle East is over $3 trillion, and that is massive. This is a full-blown economic realliance between the US and the Middle East, because now the Middle East is placing its bets directly inside the US economy. So the next question is, okay, that's cool, but how does this affect me as an investor? And here's why this is such a big deal. This is about where the world is placing its bets. Now, Saudi Arabia is home to one of the biggest sovereign wealth funds in the world, and they're saying we're betting on American innovation, on American defense, and American infrastructure. And the reason that it's so important is because, remember, the stock market loves being able to predict the future. And when countries come together to make an alliance of peace and prosperity, the market really likes that because that's predictable, unlike war, which isn't. And when you zoom out, it almost looks like this is a response to the rise of China, BRICS, and the fear that the US dollar is somehow losing global dominance. So this is almost like a reset back to the global order, not through war, but through investment, alliances, and economics. And why that matters so much is because when this kind of foreign money floods into US companies, whether it's Boeing, Oracle, GE, doesn't matter, that money doesn't just sit there. It moves markets. It lifts stock prices. It raises earnings expectations. It creates jobs. And it gives the US companies the resources to compete. So now the US is fighting back, but not just with tariffs or sanctions, but by using scale, money, and strategic alliances and investments as its weapon instead of just war. Now, another huge development that happened though is that just days before the China deal, President Trump also helped broker a ceasefire between India and Pakistan. These are two nuclear powers that were literally exchanging missiles earlier this month. For a moment, the world genuinely thought a regional war might break out. But behind the scenes, the US was working really hard to defuse the situation, and in just under 48 hours, both countries agreed to stand down, and by May 10th, a full military ceasefire was in place. Now, time will tell how long that ceasefire is going to last, but this is huge. And again, if you're wondering how any of this relates to investing, it's the same story. Predictability, stability, and confidence. With more confidence, money flows into the markets faster. The hunger for investment risk grows, and markets tend to go up, which is usually the pattern. But the story doesn't stop there. Now here's a headline that really stood out to me. US payroll growth totals 177,000 in April, topping expectations. And that sounds great, but Ground News showed me something way more interesting. In control. Thanks to Ground News for sponsoring this part of the video, and now let's get back to it. The US and China announced a surprise pause on tariffs. Now, to understand why this is such a big deal, I have to rewind. Over the past year, the US ramped up tariffs on Chinese imports all the way up to 145%. That was a huge increase from the already high 25% range we saw during President Trump's first term. Now, China fought back with 125% tariffs of their own, and the result was exactly what everyone expected. Global supply chains got squeezed, US companies started reporting shrinking margins, inflation pressure spiked, and the stock market reacted pretty badly. That's right around the same time people were calling for a recession and a stock market collapse, which never happened yet. But a lot of this is what caused the volatility, because markets hate not being able to predict the future, and a full-scale trade war between two of the world's biggest economies is about as scary as it can get. So that's what made this week's announcement such a big deal, because both countries, the US and China, agreed to cut their tariffs dramatically from 145% all the way down to just 30%. And because these tariffs are now paused, the markets didn't just go up, they exploded. The S&P 500 went up, the Dow Jones went up, the NASDAQ recovered, and it was some of the best times for stocks in years. And then something happened. One of the biggest crypto exchanges in the US was quietly added to the S&P 500 index. And this is something no crypto company has ever done before. And why this matters so much is because when a company joins the S&P 500 index, every major retirement account in America starts to buy in. Index funds, pensions, even grandpa and grandma's 401ks. And this means billions in new demand overnight. And every dollar that gets put into this S&P 500 index gets allocated to Coinbase indirectly. And as Coinbase grows bigger and bigger because of it, it moves up the ladder. So it gets more and more pennies of that dollar. And for investors of Coinbase, like this guy who bought at the peak, it's more than just some financial boost. This is a huge symbolic moment. It means that crypto is not just this crazy thing that exists outside the system. It's now officially part of the financial mainstream, and it's being embraced, and it's only going to get bigger. And that brings me to Bitcoin, which is now trading above $100,000 a coin again. After the price went down earlier this year, Bitcoin's recovered. And while a lot of that has to do with ETF flows and institutional demand, keep in mind, the Google searches for Bitcoin are not at their peak. Bitcoin is still near its all-time high, and $100,000 Bitcoin now seems kind of boring. That's a really important perspective to keep in mind because this is not 2022 anymore. Interest rates are still high, but the world is starting to stabilize. And in moments like that, investors don't just hide their money, they look for places for it to go. So if you're wondering why Bitcoin's going higher, why Coinbase is outperforming, why the S&P 500 index is hitting levels we haven't seen in a long time, it's all part of the same story. Peace creates clarity, clarity creates confidence, and confidence fuels the markets to go higher. So here's how I'm personally investing and how I'm thinking about all of this. When the world starts to shift, like when money and politics and power all start to realign, I don't really want to be sitting out on the sidelines just waiting. I don't want to take advice from someone saying that we're about to see the biggest crash ever. Yes, that might happen, but I do want to be in the position of staying invested in the markets, even if they're acting like this. So here's what that looks like for me right now. I'm still dollar cost averaging into the S&P 500, and I'm still buying VTI, which is the broad stock market. VOO is another stock I own, and the two are pretty much 99% correlated. They're almost the same thing. So that hasn't changed. Because I think even in moments of chaos or change, America's biggest companies will still find a way to adapt, and history has shown that time and time again that in the long term, the trend is up, especially when money's flowing back into the US like it is right now. Now, second, I'm still buying Bitcoin, not because I think it's going to go to the moon tomorrow or it's going to be worth $1 million anytime soon, but because I think it's becoming a permanent asset in the financial system. It's not just speculation anymore, and every single week and every month that passes, that becomes more and more true. And for going into this new financial era, which I think we are, I want to have some exposure to the thing that exists outside the system while it's still early. Yes, even at $100,000 a coin, I still think that's really early. But I'm also keeping more cash on hand than usual, not because I'm scared that the market's going to go down, but because I want to have money to live on and invest with if something were to happen. And a big chunk of that money is sitting in what are called short-term treasury bonds, paying me about 4% per year. So I don't want to have to sell anything. Whether you believe this moment is the start of a new golden era, or it's a temporary spike and we're going to crash at some point, which could also be true, the signal so far is money is moving into the markets, alliances are shifting, and a new financial era is starting to happen. And the biggest risk for me isn't being wrong, it's being unprepared and staying out of the market. At least for someone in my situation who has some time to stay invested. But as always, I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. I'd love to see you back here next week. I'll see you soon. Bye-bye.